Let me let you in on a little secret. Interest rates don't matter. In case you missed that, interest rates don't matter. Yeah, you heard me right. I know I haven't lost my financial marbles. I actually have very good reasoning for telling you that not only do interest rates not matter, but higher interest rates can actually help you. And that's exactly what I'm going to tell you about right now during this training. So if you're getting caught in all of this rhetoric about interest rates going up, stop right now. You need to know the truth. You need to know how this can be a huge advantage for you. And that's what I'm about to decode right now in this training. So hold on to your hat. Let's get started. So first of all, I'm not crazy. Yeah, I know. High interest rates are something none of us think that we want to have, but there's actually good in high interest rates. And one of the first and most important reasons that high interest rates actually do matter and are okay is because it means that higher risk is acceptable. Look, 10 years ago, it was really, really hard for us as entrepreneurs to get business financing. But now it's easier than ever to get business credit cards, to get loans, to get credit lines. We can get it as a newer business. We can get it if we have credit issues. We can get it even if we have a little bit of revenue, sometimes even if we have no revenue. But all of this alternative lending is possible for us because these alternative lenders are charging higher interest rates. So just because these interest rates are high means that the financing exists. If you didn't have these higher interest rates, a lot of these alternative lending products wouldn't even be available. And a fraction of the capital that we need and we can access right now wouldn't even be here for us. So keep in mind that interest rates are based in large part based on risk. So if you're paying a higher interest rate, it means your risk is higher, and that's okay. If it weren't for the higher interest rates, you wouldn't even be able to get that financing, and being able to get the financing allows you the access to the money you need to leverage to wisely grow and scale your company. Now, on that same note, like I said, interest rates are based on risk. So there's a lot of things you can do right now to be able to lower your risk. So for example, if you have consumer credit issues, fix them. Work with a reputable credit repair company to have those repaired. If you actually don't have business credit, establish business credit. A lot of lenders and credit issuers look at your business credit quality to determine the actual rates that you will pay. Think about things like assets that can be pledged as collateral, inventory, equipment, stocks, bonds, 401ks, IRAs, real estate, even cryptocurrency can be leveraged as assets for the lender to offset the risk. And when you offset the lender's risk, they give you lower interest rates. Make sure that you have good time in business. Make sure that your fundamentals are established. We call this fundability foundation. Make sure you have a credible address for the business, phone number, website, email address, have a license for your business, have a business bank account. The more credible your business looks, the better interest you're going to pay. So you have control over the risk factors that are driving the interest rates up. So keep in mind these two things. It's okay to pay higher interest. That means you're able to get financing when you typically wouldn't have been able to before. And it's a matter of using that as an opportunity to wisely get the money you need to be able to grow and scale your company. The second thing is think about the things we talked about here that lower your risk and focus on doing that now. Build a credible business, improve your consumer credit, establish your business credit. These things go a long way to helping you actually lower your interest rate. The other thing to keep in mind is in most cases, the interest you're going to pay on business financing is 100% tax deductible. That means you get it all back anyways. So it doesn't make a difference if you're paying 6% or 60%, you actually get that money back on your tax returns anyways. So keep that in mind. What really matters most is, will the money actually help you grow your business? Is the money actually going to provide an opportunity for you? Is it going to help you lower expenses in other areas? Let me give you an example. One of the highest interest rates I've ever seen in my time in business is 65%. Yeah, 65%. The guy actually used it to buy a piece of equipment called a tree destumper. It like pulls stumps out of the ground. Didn't even know that was a thing, but it is a thing. Now before, he was paying people manually to do this. So even though he's paying 65% interest, he still saved $10,000 a month from paying the manual labor he was paying before. He was ecstatic. He gets all the interest back on his taxes anyways, and his payments overall go down $10,000 a month because he replaced all of the manual labor, the employees he was managing, everything to do with that nightmare with a piece of equipment that did it all for him. So again, don't be afraid of high interest rates. There are things you can do to lower those interest rates, and the fact that they are high means you have opportunity where you wouldn't have before. The smart thing to do is use that money to leverage to be able to create large growth in your company. If you're doing that, you just can't lose. We had another client that was very high risk. His business was new. He had credit issues, but what he had was a soft drink manufacturing company where he had the actual canning outsourced. When he brought it in-house, even with high interest rates, he was still able to lower his cost in half. That improved his overall profit margin by over 30%. That's crazy. One move, he increased his profits by over 30%. So he didn't care that he paid the higher interest rate. He understood his risk was high, and he was willing to do that because it still put 30% more money in his pocket. So keep these things in mind when we talk about interest rates. We can't control that the Fed keeps raising the rate. We can't control that that means that banks will charge us more money. But what we can do is keep all these things in mind and use it as an opportunity to get more money to be able to grow and scale our businesses. If you got value from this training, make sure you like and subscribe, and make sure you check out the link in the description to schedule consultation with us right now for a free finance assessment. We'll actually talk about the money you're able to get right now. We'll give you tips and tactics to build your business credit. We'll even talk to you about the fundability and fundamentals that you need to improve right now to have the best chance of getting approved for the most money. Make sure you like and subscribe and keep an eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business.